Hello everyone, this is Bir Grewall. I'm your SIKH American, India-born financial strategist, advisor, and an author with a proven track record, and founder of Financial Advisors of America Inc. Today we'll be discussing, is putting a higher down payment or a lower down payment to your advantage, and the risks and the advantages and disadvantages. That's what we'll be discussing today. However, before that, let me share with you who I am and what is our track record. All right, why should you even listen to us? All right, well, let me first of all share it with you. This is our track record, yes, okay, and so people who used our financial strategies, you did not lose any money even during the financial meltdown of 2007, 8, and 9. Don't worry about it, yes, okay. You can go and check it out on our website at faoai.com. That is short for Financial Advisors of America Inc.com. So, but just be in the moment, because this is very important information I'm going to be sharing it with you. Now, so this is our track record, and now why am I doing this thing? Well, back in 1995, after losing my custom-built hilltop home in Aliso Viejo, California, which I never ever thought that it could happen to me in a million years, but it did happen. Then I said, well, there has to be answers, okay, to the questions, and the questions that I had was, okay, there has to be strategies and products, okay, that can provide me with the financial security and peace of mind, no matter what happens to the economy, no matter what happens to the stock market, no matter what happens to the taxes, and no matter what happens to my health also. So I set out on this journey to find answers on this one, and it took me years, and finally the answers came, and the proof came in 2007, 8, and 9, when people who had used our strategies were not affected with that financial meltdown, and that was the best feeling to tell my clients at that time, who were also nervous and calling me up, when the market was going 40, 50, 60% down, and people were losing their hard-earned money and they couldn't do anything at all to stop it. And it was the greatest feeling for me to say, hey, don't you worry, you are safe. All right, folks. So that is what this track record is all about. Okay. Now, many of you might be thinking right now, oh, well, tell you what, I've recovered from those losses. Yes, absolutely. You might have, and you might have made some money also. But our clients are way ahead because they did not lose at that time, and so they've been compounding and building up on the rest of it. So that is our track record. And now let's get to the subject on hand. So, and lately I had been discussing the home, mortgages, home equity, and stuff like that. And I've been sharing with you the Federal Reserve Bank study that came up. You can download it down here, and share and forward this thing, this email, share it on your social media and stuff. Let others benefit too, because with the pundits predicting another stock market crash, and it was even in the presidential debate that happened, okay, that they were talking that hey, this is a superficial market, okay, and the housing bubble is about to burst again. Well, I'm not into that kind of a thing. Okay, do not take it. I'm not scaring you or anything. But my concern, the reason I'm doing it right now is that knowing what I know here, you see, okay, I want to share it with you, and so that way you know you can protect yourselves and never be a victim or a sitting duck like in 2007, 8, and 9. You see, all right. And so now you might be wondering again, what is expected in return? Folks, there is no expectations, nothing at all. It is just my consciousness. Okay, said, hey, knowing what I know, I have the answers. Okay, and these are usually reserved for our high-end, high-paying clients. Okay, that we share these strategies with. But during this Tuesday training sessions, I'm sharing them with you. This is my give back to the community, to you, and the country that I love, and the people that I love, and the country that has given me so much opportunity, and this is my humble gift to you. There is nothing expected in return, however, if you feel that this is some good information, instead of thanking me, please share it and forward it to all your friends, family, and share it on your social media. Let others benefit too. That will be my thank you. Because I would hate to see. I want to empower you with the strategies and knowledge and products and stuff that can provide you with that financial security that I was talking to you about. No matter what happens to the economy, no matter what happens to the stock market, no matter what happens to the taxes, and no matter what happens to your health, also we have a proprietary product, folks. I had sent you the information in one of the previous ones, and you can check it out on our website there too. And matter of fact, I want you to go to the website and check it out at faoai.com, and check out the testimonials there too. And this is the first of its kind. It's our proprietary product, okay, that pays off while you're still alive in case you have health problems like heart attack, stroke, cancer, and stuff like that. Okay, when income stops, bills don't stop, and there is, to our knowledge, there's nothing else that can provide you income or lump sum money at that time when you need it the most. We see that good hardworking people, okay, when they have some health problems and they cannot work to bring in the income like before, and so the income stops, bills don't stop, and financial disaster starts. And these are good people, the hardworking, honest people. You can no, it doesn't have to happen. However, let's get back to the topic on hand today, and please do not forget to download that Federal Reserve Bank study, and forward this thing, like it, share it, and forward it to your friends and family. Today we are going to discuss what is better. Is paying a higher down payment better for you, or lower down payment better for you? And I'll share with you the good, bad, and the ugly on that one. However, right now, let's just take this example here for a minute. And see, this is a $200,000 home that they bought. One of them is excess down, you get large down, and then the other one is okay leverage. All right. So this guy puts in $160,000 down, and this other guy, you listens to our strategies, he just put in the minimum only down, 20% down. Okay. And now after 10 years, they have a mortgage. This guy's got $40,000 mortgage. This one $160,000 mortgage. At the end of 10 years, the home values are at $300,000. Both of them, they went up exactly the same. Now, this was the original mortgage right here, and this person has $260,000 equity in it, and he have $140,000 equity, right? Okay, and so less down payment of 40,000. See, there is 100,000 left over for them, and here too it is $100,000. Just imagine why Okay, the house went from 200 to $300,000. So there is a $100,000 profit for both of them, whether they put down the too much down payment or lesser down payment. All right. So, folks, this thing proves two things. All right, is that home equity has zero rate of return. All right, zero rate of return. Let me repeat that. Okay, and people think, oh well, my home has gone up. Okay, in value. Absolutely, it would go up that $100,000 whether you put higher down payment or lesser down payment. Now, with our strategies, the way we do it, okay, you never put your hard-earned money down, because it's not me. Don't listen to me. I'm proving it to you that the people who had the higher down payments and stuff like that, okay. Now tomorrow, if you cannot, if you lost your job or something, cannot make the payments, three payments, your 91st day, okay, they send it to foreclosure. All right, and you have lost everything right here, okay. And this is what happened in 2007, 8, and 9. Okay, people who had been sitting on that huge equity and stuff like that, they were all excited, and in a jiffy, overnight, all that dreams are gone. All right, but the ones who had lesser, okay, and it didn't hurt them as much. Right. But coming back to this thing, the equity grows as much whether you put down more or whether you put down less. All right. So, folks, you want to keep the. My purpose is to okay, to share with you to keep the odds in your favor. All right. So, putting the least amount of money, it gives you more liquid cash for you for emergencies, and you can put it elsewhere. You can have another horse working for you, and if you just tie it down into the down payment part of it, okay, you have just cut down one extra horse working for you. Number one. Number two is you have assumed so much more risk on yourself by putting that higher down payment. Now, I'm not suggesting that you have to do these things. I'm just suggesting with you what are your options and whatever you feel good about. Okay, and that's what you need to do. All right. So, and since equity has zero rate of return, okay, many people, they usually don't even go with the 20%. Go with the least amount, and here's the reason why. Because this is home mortgage is the only biggest tax deduction that you have at this time. All right, when you have a lower mortgage, you have a very little tax deduction, and you want to have as high as a mortgage, so that way Uncle Sam will help pay for your payments, on this one, because your deductions are much more higher. People say that, hey, I hate paying taxes and stuff, right? Well, they have a right to their opinion, but I will never ever be a party to lying or cheating on taxes. But knowledge is power. So I tell them, okay, hey, why don't you go get a bigger mortgage, okay, and Uncle Sam will legally give you a bigger deduction. You don't have to then complain, So, folks, this is how you get ahead with that. Okay, lower down payment. You have more extra free money. You can put that in. I've been sharing with you where all to put this money in and get 6-7% tax free. Without any risk and stuff like that. So you should go and check out all the other emails that I've been sending you. All right. Now, we've been doing this thing for the last 30 years, so that's why we claim that none of our clients lost any money, okay? And these are the strategies that did. Now, looking at this thing, okay, somehow Chicago Tribune got hold of this strategy too. And here is Chicago Tribune's thing, and they are saying, okay, large equity can be be a big disadvantage to you. And also many times we think, okay, well, tell you what, if ever I need the money, I can tap into my equity. Yes, that statement is true, but it's only partially true. If you lost your job, or if you are a senior or someone, okay, you try going and getting your equity out. Banks many times refuse you. You're right. So this is, banks will lend you, like the saying goes, they will lend you when you don't need the money, but when you do need the money, that's when the problem starts. So folks, doing the home equity planning is to your advantage. And I hope I had been able to give you another idea as to how you can free up the money to have another horse working for you. And this is how many of the people get ahead. So it's no different. They just know how to juggle their money around and put it to work. They have 1, 2, 3, 4 horses working rather than they working alone themselves. Well, folks, hope I had been able to give you some idea, and it may benefit you. And if you feel that it is beneficial information, then please spread the word. You have my full authority to forward this email to your friends and family. Put it on your social media. Let everyone else benefit also. That will be my thank you to you. That will be your thank you for me, whatever okay. And with that, I want to thank you so much. You have a great day. Blessings, and we'll see you next Tuesday. Bye-bye.